All right. Hello. Test. Let me see. Why is this always the case? My camera. There it is. Okay. Hello, everyone. Good morning, good afternoon, good evening, wherever you are in the world. How's everyone doing? Hello, Paul. Hello, Vaz. Nice. You'll join this one as well. Perfect. You're welcome. Hello. Perfect. I saw some people join for the first time. Welcome. I hope you learned something. Good evening, good afternoon, good morning. Hello, Joseph. Hello, Joshua. Hello, Henry. Hello. I'm doing good. Thank you very much. Thank you. Your country's good night. Okay, there's SVY. Nice. Welcome, SVY. How are you doing? Hello. Gold front with me right before autumn high. What a pain. This week was quite an interesting week, but we'll dive into that as well. We'll dive into all of that as well. How's Derek? You would have to ask Derek. I imagine he's all right. But from Dubai, okay. Love to see it. Perfect, Milan. Perfect. NASDAQ crashing. Let me see. Ooh, wow. Actually, as we speak, crashing right there. Okay. Interesting. We'll dive into everything. As well. Love to hear Germany. Daniel, nice. Goedenavond, Giel. Goedenavond. Hello. Hello, everyone around the world. Looking fresh. Thank you very much. Thank you. Thank you. I appreciate it. From Ghana. Welcome. India, of course. Love to see it. All right. Any news got released? Markets are damping. I'm not too sure. Was not some PMI? Or that was already before? No, it was not PMI. Maybe something else. Maybe something unexpected. Not entirely sure. Florida. Nice. Hello, Logan. How are you doing? Okay. Perfect. Let's dive into it. Yeah. NASDAQ right here, already crashing. There's a few things I want to pick out today. Again, from, first of all, I want to mention as well, breaking Trump, calculating increased tariffs on Chinese products. Okay. Well, there we have it again. And that's been a theme, right? So thank you for sharing that, Alex. It's been a theme. It's been a theme all around. Trump can tweet something or can mention something on Truth Social or whatever it might be. And all of a sudden the market just does something like this. A lot of volatility right there in the market. That's been a theme for ever since Trump got in presidency as well. Anyway, I was saying that first of all, I want to mention live streams will be at 9 a.m. New York local time. I saw all the polls on all the platforms will be at 9 a.m. New York local time. So that means that for Sunday will be at 9 a.m. For Friday next week will be at 9 a.m. as well. For next Sunday, etc. 9 a.m. 9 a.m. That's the time. That's the prime time. So next week we can also take a look at some of the markets when we take a look at Friday 9 a.m. as well. Will be quite interesting to see. Anyway, on top of that, I wanted to mention as well, there's one topic that I really wanted to talk about right here. And of course, if you have some topics for me as well that you really want me to dive into, we'll do that. We'll also dive into more things on Sunday as well during the forecast. But what I think is a large problem when it comes to traders who are maybe a little bit new or you're just starting to trade as well, what I think is very important to understand, you can spot trades in hindsight, but you can't really spot trades when they're happening live, if that makes sense. And that's something I want to talk about right here. So how do we go about that? Again, we're currently seeing a NASDAQ, a very aggressive drop right here. Don't really want to dive into this just yet. We'll save it for a little bit afterwards as well. Okay, so let's first just go over the market right here, and then I'll slowly talk about how to spot these trades whilst they are happening as well. So what is very important to understand right here on the dollar, we are currently looking at a Friday. For this Friday, I mentioned this in the MMT forecast. This Friday, most of the time, is not going to be that interesting. Now, the reason why is because if we've already been expanding like this, again, think of it like this. If you have been running on a Monday, you have been running outdoors on a Tuesday, then you start running inside on a treadmill on Wednesday, and then you start running some more outside on a Thursday right there. You're going to be exhausted by the time we reach Friday right there. So it's very unlikely that Friday is actually going to still create a new expansion to then continue higher. Could it happen? Of course, but approach it with a little bit more care, if that makes sense. So for example, the fair value gaps that we have right there, it's not that interesting to continue higher from, simply because we have been running higher and higher and higher all this week. So there's going to be a day where we are exhausted again, where it's not that interesting to look to get involved. Now, what I want you to pay attention to, and this is eventually what's going to lead us to understand how you can start spotting these trades in real time and not only after the fact. It's very important. So what tends to happen? Okay, from my experience, from what I see as well in students, etc. Well, MMT students, we have it quite nicely under control, but newer students that come into trading, essentially. What tends to happen is that you can only really spot trades once they already happen. So in hindsight, for example, at the end of the week on a Friday, like we're doing right now on a Saturday, you might recap the week for yourself and see, I should have gotten involved right there. I should have gotten involved right here on the bearish move right there. But how can you start spotting it in live, in real time? Well, usually what tends to happen is it's not, so what a lot of people think the solution is, you need to focus more. You need to just focus more. You need to somewhat push your eyes harder to see the charts better or something like that. That doesn't work. So what actually the problem is most of the time you vaguely know what you want to see. That's why you can spot it in hindsight, yes, but you don't know exactly what you're waiting for. So you don't know since you don't know exactly what you're waiting for, then it becomes very difficult. Think of it like a bus stop. When you're at a bus stop and you don't really know which bus you need to take, there can be a few buses that come by and eventually you miss the bus because you don't exactly know which bus to take. And then afterwards you see, I should have taken that bus. But if you know, you arrive at the bus stop and you know exactly which bus you should take to get to your destination, perfect. It's quite easy, right? It's quite straightforward. I need to get into this bus number 9 right there. I need to step in and I go to my destination. This is where I need to get out. So what is very important to understand is preparation is also a large part. But again, you can prepare yourself thinking, I'm going to do some push-ups to be able to spot my trade. That doesn't work, right? You need to know what you are waiting for. So there's one common thing, and this is what we call in the MMT as well, an area of opportunity. Now, an area of opportunity, every single trading plan out there, every trading plan has an area of opportunity, every single one of them. So an area of opportunity is simply the area where your trades are going to present themselves. So what you'll notice a lot of times as well, what we started talking about on Sunday, for example, right here, when we have this survival gap, let me make it just a normal color right there. Okay. When we have this survival gap, what did we talk about on Sunday? If we start running this high right here, that means we're more than likely going to reach this next high and potentially going to reach those next highs right there as well. So what did we do on Sunday? We set a parameter. We knew exactly the area where we potentially want to look to get involved. This area right here. Why? Because what we're doing right there is we're trading in between PD rates. And this is really what it comes down to. So a lot of times, for example, and from my experience, the reason why I always used to miss trades and only be able to spot them in hindsight, etc., is because I would go into the lower time frame for this week and I would say, okay, well, the 1 hour fair value gaps right there, for example, right here, we're holding right there. I should have gotten involved right there to buy, to get it to continue higher. But again, if that's your thought process, then next week you're going to miss it again. Why? Because you don't understand what leads up to that 1 hour fair value gap holding, if that makes sense. There's an area where it holds. So just a fair value gap, a random fair value gap that's holding, it's not really going to get you anywhere, if that makes sense. So you need to understand the area, and the area is likely most of the time going to be trading in between PD rates. So for example, right here. But the moment we reach this high and those highs right there, we also have this move right here to target these next highs. Afterwards, we also have this move higher right here to target these next highs right there. And afterwards, what we see right here is we have a move towards this next 4 hour fair value area that we have right there. And it's essentially where the week ends, at least for me right there. And that's what you'll notice. So for example, if you start doing this on, let's say in the EU right here, when you take a look at EU, we have this swing low right there. And if you just mark out every single PDA that you have on the chart, a story starts to develop. So you have this next target right there. Okay, the moment we start running this low, this low right there, perfect. An area of opportunity right there. And arguably even earlier, like we saw right here, when we were running that low right there, an area of opportunity right there. And if you just start doing this, you're going to train your eyes to see this a lot better as well. Now, what is important to understand? When you're just starting out and you haven't really seen any profitability just yet, stop focusing on 3 trades a day, 4 trades a day, even 2 trades a day is too much. Why? Because you don't really know what exactly a high probability trade is for you. I need you to understand it very clearly. At the start, I can tell you, for example, when something is high probability, but you don't really understand it yourself. For example, I can tell you what quantum mechanics is, even though I have no idea what it is. And if I tell you, you might understand it, or you might hear it, but you don't really understand it, if that makes sense, for yourself. That's where practice comes in. So what is very important to understand, at the start, you don't really know what a high probability trade actually is. You need data, you need experience for that as well. So what is important, at the start, you're not going to find 2, 3 high probability trades a day. That's absurd. That's insane. So at the start, you just want to focus on finding 1 high probability trade a week. So that takes away so much pressure. And again, the goal is not to immediately make millions of profit, etc. right now. The goal is just to learn the process, and eventually we can scale it, etc. So right here, what is important, when you recap your week, see if you can find 1 high probability trade a week. In this past week, no matter what you trade, indices, Forex, gold, find 1 high probability trade a week. And then what you want to study is, okay, let's say, for example, right here on NASDAQ, I find that high probability trade. Let me see. Okay. If I go into NASDAQ right here, and let's say I look at this fair value gap right here, and we overtake that fair value gap, okay, this is where we really started running very fast right there. Okay, maybe that's where an entry for me is right there. So this was a very high probability trade right there. Then what you want to start doing is you want to start seeing the patterns. So what are the patterns that actually lead up to that trade ID? And once you start seeing the patterns, what are you doing? You're slowly creating yourself an area of opportunity, So you're slowly making it a little bit more mechanical, and you're training your eyes not just to spot it in real time, but also your mind to know exactly what you are waiting for. And then once you really get the hang of that, and you can very easily spot 1 high probability trade a week, then you move on to 1 a day. And then seeing, and again, there's not always going to be a high probability trade in a singular day, but then you'll be able to spot them more and see, is this high probability, is this not high probability, etc., etc. And then you can, again, you start slow, and once you get the hang of it, you start scaling more. So you just up the volume essentially. And that's very important to understand. So start off with that. That's so crucial, in my opinion, so extremely crucial. So for example, what I started doing at the start of my trading journey is I knew about these fair value gaps, but I had no idea where they were holding, why, for example, these bullish fair value gaps didn't hold, why these bearish fair value gaps don't hold right there. I had no idea. I was quite clueless. I knew about fair value gaps, yes, but that was about it. So what I did is, okay, I went to study. That was one of the first studies I've ever done. I just studied, where do these lower time frame fair value gaps actually hold? So for example, if I start marking out, okay, let's say this fair value gap right there, and I start marking out, let's see, do we have any other fair value gaps that are holding? Let's see this tiny fair value gap that we have right there. Fair value gap holding right there. Okay, we also have this fair value gap holding right there. And if you start marking those fair value gaps right there, then what you'll notice is eventually you come to the conclusion they hold in a certain area. And that area is what we call, for example, a context area or an area of opportunity as well. And then you'll slowly be able to spot those context areas, those areas of opportunity, and that allows you to then take a lower time from entry and know where these fair value gaps are holding, and it becomes a lot easier to spot it in real time. That's very important to understand. But again, I need you to understand as well, because oftentimes The solution is, for example, if you miss trades, then my first thought process is, if you miss trades, okay, just focus harder. Just focus more, I guess. You need to focus more. It's not necessarily always the case, because when you miss trades, oftentimes it's also a symptom that there's inherently something wrong in your trading plan. So for example, you don't clearly know what you are waiting for, and because you don't clearly know what you're waiting for, you are missing the trades. Think of that bus that comes by. You don't know which bus you are waiting for, so you miss the bus. So that's very important to understand. It's not doing it harder or better oftentimes. It's doing it different. And that is very important to understand. So when you do things different, when you approach it different, then it will make a lot more sense. I hope that makes sense. If it doesn't, of course, feel free to let me know. Again, we were talking about the dollar right here. And of course, when we talk about the dollar right here, we also have to take a look at EU and how the majors were performing this past week. It was very different across the majors. For example, in EU right here, if we take a look at this fair value gap, what did we mention on Friday? Again, on Sunday, sorry. What is important to understand? The reason why I consistently say we mentioned this on Sunday, we mentioned this on Sunday, we mentioned this on Sunday, etc., is not to boast and to sit here and say, oh yeah, you missed it and we mentioned it already, ha ha ha. No. It's purely for the reason, listen, we know what we're waiting for. It's not a surprise anymore. If we would have run this high right there, we saw it happen because we outlined all the different options. When you outline all the different possibilities of what can potentially happen, it's not a surprise when all the possibilities potentially happen, right? So for example, same thing, right? If you go to the airport and you think ahead, okay, I'm going to the airport, I'm going to check in, I'm going to go through customs and wait for my plane. That's the only option you take into account. But what if you also take into account the option, if I go to the airport, I might get denied a check-in because I don't have a flight back. It's a whole different scenario. So now when you take into account that option and it actually happens, you already thought of it. So you're not going to get stressed. You know what to do. You're going to keep your calm. You know exactly which steps to take next because you've already thought it out, if that makes sense. That's super important to understand. So for example, this was also an option. If we start running this high right there, then we would potentially get involved to target that high, But it didn't happen. But that's not the point. That's not the point. So a lot of people, and let me rant about this a little bit because I think it's very important to understand. A lot of people think a forecast is to be right. A forecast is not to be right. A forecast is purely there to lay out the different possibilities of what can happen. Once the possibility happens, you execute. That's it. So for example, you can always recognize when someone is a little bit more of a beginner to trading when they say, oh, you made a forecast, but it didn't play out. It's not a forecast. That's not what a forecast is about. That's an ego game. We're in a trading game right here. The trading game is purely lining up the different possibilities of what can happen. Once that possibility happens, perfect. You execute, you know what to do. It's not about this needs to go higher, this needs to. So you'll never see me do that. This needs to go higher or something like that. You'll never see me do that. That's very important to understand. So we're working with probabilities right here. Okay, if we overtake this bullish fair value gap right there, then at that moment in time, there's nothing preventing us from continuing higher. From continuing lower, sorry. So if we overtake this bullish fair value gap right there, there's nothing preventing us from continuing lower. So used to indices, I always say preventing higher. Okay, so that's done by running this rejection low right there. Okay, if we go into the lower time frame a little bit more, what do we see? The moment we sting below this rejection low, immediately we get a large rejection. Okay, not ideal. We wait right here. Can we overtake this 4-hour fair value gap right there? Running this rejection low right there to now continue lower again. Okay, perfect. And that's exactly what happens right there where trade opportunities are. So for example, if I believe Prezzo, MMT member, support member as well, took a trade like this right here, covering those highs, targeting, I believe he targets a 1 to 3 right there to continue lower. That's a perfect trade. Or a little bit later from these fair value gaps right there, covering the order flow lag right there to continue lower. But the point is right here, I can give you many examples on how you can get involved right here. The point is spotting the area where to get involved in. And then you just need a mechanical, objective entry pattern right there that you can consistently follow. But the point is, again, finding that area. So the area right here happens from the daily fair value gap, 4-hour value gap that we overtake. That moment in time, we have nothing preventing us from continuing lower anymore. So we have a clear path to target these lows. Okay, now to target the main next low. Remember the daily swing lows that we marked out right there. Remember this low right there, next low. And if you go into the weekly, the same thing happens, right? So the moment we start running this low right here, we now have a clear path to target the next low right there. And that is your area of opportunity for the week right there. And that's important to understand. So if we move on a little bit to the other majors, also I would love to go over the indices, take a look at the indices in real time at this moment in time. For me, an Australian dollar, US dollar, and for example, a GU, yes, of course, we can spot these opportunities as well, right? If we overtake, for example, this fair value gap right there, running the rejection low right there, perfect. We have a clear path to now continue lower to target these lows. We can spot that, right? I need you to understand, at some point in your trading, you're going to be at a point where spotting opportunities is not the problem anymore. You can see opportunities everywhere. Everywhere around you, there's an opportunity. It's just about what is your opportunity right now? What is the highest probability opportunity for you? And that's very important to understand. So it becomes picking your poison, purely a game of picking your poison. So for example, what do you want to execute on? What is your high probability setup right there that you can consistently find? Again, of course, I can also see an opportunity right there to potentially continue higher, but it didn't play out. But the lower price did play out right there. I want to get involved in this high probability bearish opportunity right there, if that makes sense. All right. If we move on to GU, New Zealand dollar, it's the same thought process. For example, US dollar, Canadian dollar, which we also mentioned, and US dollar, JPY. I want to rant a little bit about US dollar, JPY. JPY, well, Japan had a new prime minister selected. A prime minister with quite some radical ideas, you could argue. Whether you agree with it or not, it doesn't really matter. It's not the point. But that's why, for example, a JPY had arguably somewhat of a crisis, a short-term crisis right here. So why is US dollar JPY opening with a gap? Because JPY right there is in a short-term crisis at that moment in time. So what is important to understand? If we take a look at all these JPY pairs right here, if you are a Forex trader, this is your time to shine. The moment you learn right here about this crisis on Monday, we open up with a very heavy bullish price action right there. It doesn't really matter at that moment in time what we are going to be trading. So a New Zealand dollar JPY has a clear path to target that high. A GBP JPY right here has a clear path to now continue higher to target a few fair value gaps towards the left as well. Capitalize on anything right there. But what is important to understand right here is that if you wait too long, again, we mentioned this in the MMT, this eventually is going to, of course, have a retracement as well. We can't keep this up, price action like this. So eventually we're going to see a correction, etc. JPY is simply going to recover. All the stress, all the drama is gone eventually. That's when you're too late at that moment in time, when you need to wait again. So what is important to understand right here, for example, Canadian dollar JPY, during the Tuesday live session in the MMT, we mentioned this right here, these fair value gaps right there, whilst we still had that absurd volatility to continue higher. This is very interesting right here to target these highs, right there. Afterwards, taking a step back. So JPY for the Forex traders amongst us, that's something you want to capitalize on right there. That's very important in my opinion. And now, of course, we see larger retracements, which was arguably also expected. Okay, let's move on. Indices. Let's see. Large rejections to end the week right there. Perfect. The more rejections we get right there, the more we have to work with as well. So that's quite nice, in all honesty, heading into next week. Let's see. Let's first, but before we dive into that, that's also for the forecast. Let's just dive into the recap that we saw. Again, this was, majority of the week was just all-time high protocol, right? It was just all-time high protocol over and over again. So if we take a look at NASDAQ, for example, we had this bearish fair value gap against us right there. Perfect. We overtake it by running the rejection high, eventually sitting right there. We have a clear path towards the all-time high again. We do the same thing, rejection right here. We have right here, and we overtake the rejection right there to run higher towards the all-time high again. That was about it. Now, at the end of the week right here, you also had a similar thing, a little bit less interesting in my opinion. Because what we see right here is we overtake this fair value gap right there to then again continue higher, target potentially the all-time high. What is important to understand right here, eventually, so heading into this Friday, yes, the start was quite interesting. Heading into this Friday, we get deep retracements, bearish fair value gaps as well. It becomes more of this consolidation. Not that interesting to me. At the end of the week as well, I'm never really a big fan to put on a lot of risk. So I tweeted this, I believe. I'm not sure. I scheduled this tweet anyway. it doesn't really matter. So what I mentioned is, what I always like to mention is Friday is not there to make or break your week. So for example, I've made a profit for this week. For this past week, I made a profit. So I'm in profit for this week. What is important to understand, and that's mainly because of these trades that I took right here on a NASDAQ and ES, these all-time high protocol trades right here. Also show some gold examples. So when I make a profit and then we approach this Friday right here, I'm not sitting there to try to make some more profit, almost trying to be somewhat greedy, if that makes sense. Friday is more of a bonus. So the way you can see that, the majority of the week, so the start of the week, the middle of the week, etc., that's supposed to either make or break your week. Friday, when Friday comes, it's more so of a bonus. So if a great setup happens, perfect. I'll execute it, potentially a bit lower risk, etc., just to not lose the profit that I made in the past week. If you lost during the week, then Friday is not going to all of a sudden magically make your week. Of course, it could happen, but there's a lot of well, arguably warnings, dangers attached to that, if that makes sense. Because if you feel like Friday needs to make your week, there's going to be so much pressure on one singular day that you're likely going to force IDs, etc. It's not going to be ideal, if that makes sense. So that's very important to understand right here. Okay, so we see at the end of the week right here, large drop off. Quite interesting to see how far we can drop off as well. We'll discuss it more during the forecast on Sunday. Let's see. All right. For ES, that was a very similar process. ES, a large part of this week was actually weaker than a NASDAQ. So what we see, for example, right here is we struggled a lot more to continue higher. On NASDAQ, it was a little bit easier to continue higher as well. Here, we also overtake these survival gaps to then continue higher though. Here, very similar price action right there, where eventually we get these large retracements, sort of these consolidations, not that interesting to me anymore at that moment in time. All right. Like we mentioned during the forecast as well, it was quite a straightforward week when it came to the indices right here. Just all-time high protocol, right? All-time high protocol again and again and again. Okay, if we take a look at gold, that is very much of the same. What is the price? Gold again. Gold has this weird thing where every Friday, very late during the day, very late during the week, for some reason it's just very interesting. It's very funny. But anyway, gold right here at the start of the week was super interesting. So like we mentioned on Sunday, right? If you watch the Sunday forecast, we mentioned the moment this opens up, that's going to be interesting right there. So the moment we open up right there, boom, we immediately reach for the all-time high right there. Afterwards, it's a little bit more waiting. So gold was extremely bullish right here, extremely bullish. And afterwards, we did see some retracements right there as well, which we can overtake to then continue higher again. Now, let me see, where are we? Here, we also had some setups. This is where I took a loss, for example, where we did start running this rejection high. We were very close to my target, but then eventually it hit my stop loss as well with this larger rejection. For me, it's just probabilities. I'm not too worried about that. At this moment in time, so what we mentioned, for some reason, it's showing some interesting signs of a setup again. So we have this fair value gap that's preventing us from continuing higher. And of course, the fair value area that we have right here. If we start running this rejection high, this is now a very interesting area of opportunity to continue higher, to potentially target all-time highs. Is that super interesting for me right now on a Friday? No. So I need you to understand that as well. For me on a Friday, that's not necessarily that interesting. I would rather wait for the new week, if that makes sense. Simply because it is a Friday, the volatility can die down right there. I don't want it to hold the trade over the weekend, etc., etc. So right here, but this is, again, this is what we mentioned. This is that area of opportunity at this moment in time. Let's see. Could potentially reach that fair value gap still right there to continue higher towards the fair value gap. Potentially end the week right there as well. Let's see. Just be prepared that at any moment in time, this could start consolidating as well, because it's the end of the week and the end of a Friday as well. Let's see. All right. Silver was also quite similar in the sense of, again, overtaking those survival gaps and target higher. Again, it's very much, so it's quite a boring, I would argue. I would love to tell you something very interesting at this moment in time, but when you start realizing the process of behind everything, etc., it's quite boring, to be honest. It's just waiting for the same thing over and over and over. It's not that exciting. Bitcoin rejecting at this moment in time from the all-time high as well. I like to wait a little bit. past week, not necessarily that interesting in my opinion. And same for crude oil. And JPY pairs, we talked about that. Let's see. Does that make sense? Does it not make sense? Does it not make sense? Does it make sense? Let me see. All right. What I also think, a returning thing, what I think is very important to understand is the market is really about probabilities, right? So for example, if you take a loss on, let's say, a gold, or you took a loss on NASDAQ or ES, etc., what we want to talk about, or what we want to go over essentially, is, was the trade a good trade? So was it a high probability trade? And a high probability trade does not mean it's always going to be a winning trade. High probability means that if you are on the scale from 0 to 100%, it's on the higher side of the scale. So maybe 80% of playing out, but there's still going to be a 20% that doesn't play out, right? So what is important to understand is that high probability does not mean automatically your trade will be a winner. But high probability means that over the long term, if you keep executing those same trades, it's very likely that you are going to be profitable, if that makes sense. So that's important. So when you take a loss, for example, in this past week, don't be too concerned about that. I would be more concerned, okay, was it a good trade though? Is it a good trade that followed your trading plan that was high probability? Would you execute that same trade 100 times again, 100 times over? If that's a yes, perfect. There's nothing to worry about. Then it's just one trade sample size. So for example, from my experience and from what people tend to do is they overvalue one trade, if that makes sense. So for example, if a trade doesn't play, if you, let's say, took a trade right here, and this trade eventually might hit your stop loss like that, or a winner, don't overvalue it right there. So what I mean by that is don't go dive too deep into it. Oh, what exactly happened right there? Why was it a loss? Why was it a winner right there? No. You need a larger sample size to determine what exactly is happening at that moment in time. If that makes sense. If that makes sense. What I think is very important to understand, my voice. What I think is very important to understand for, we call it thank God it's Friday. If a market has been expanding a lot, so the same way, again, just compare it to yourself. Okay, let's compare the days. Monday right here has been running higher. We have a long wick right there. Tuesday has been running higher as well. Wednesday has also been running higher. Thursday has also been running higher. Now, if you have been running, so out running, out jogging, essentially, for all those same days right there, by the time Friday arrives, you're probably going to be exhausted. You're going to be absolutely destroyed, if that makes sense. So that's the same in the market. The market has a limited amount of energy, if that makes sense. So when it's been running the whole week right there, then Friday is likely just going to do the opposite. It's going to be, for example, in this case, in a bullish week, a down candle right there. It's not going to make another major move right there, if that makes sense. So that's also what thank God Friday comes down to a lot, where, for example, traders try to catch the opposing end of the range. So actually start looking at shorts, if that makes sense. Let's see. Anything you would want me to go over, let me know in the chat right here. If there's anything you want me to go over, feel free. My brain is cooked after one trade, not the same person anymore. Same. So especially, for example, what I also think is important to understand is, especially when you're just starting out, so you can't, this is a universal thing, right? Of course, the way you are affected changes a little bit, but when you're just starting to trade, you don't know what a high probability trade looks like. You're going to be super affected by that first trade as well. So there's arguably no reason as to why you should be trading 2 to 3 times a day, etc., etc. So that's very important to understand. So, for example, I would always advise focus on one trade a day, but at the start, even focus on just one trade a week right there. If you can just find one good trade a week, that will also put up a lot of pressure, if that makes sense. Because a lot of pressure comes from, I need to find a trade right now. I need to find a trade right now during this day, etc. If you just at the start focus on one good trade a week, and then slowly you can start scaling, etc. Let's see. I have a problem in using fair value gaps. Most of the time they don't work. Then it's probably the area where you use fair value gaps. So for example, you'll notice as well, there's a lot of nuances to fair value gaps. If I talk about fair value gaps on an all-time high instrument right here, and these bearish fair value gaps, I don't expect them to work. I actually want to see them fail. But even fair value gaps failing at that moment in time still give me a lot of clarity on what price can do. Because if this one fails, we're likely to reach the all-time high, if that makes sense. So oftentimes it's again, it comes back down to what we mentioned at the start. It's where you use these things. It's how you apply them, etc., etc. That's important. What a drop off right there. Very interesting. What a drop off. Took a loss on NASDAQ now. Where was your trade? Where was your trade? There was no NFP this week. Euro Australian dollar flying high. Let's see. Where is it? Euro Australian dollar flying high. Wow, okay. What an what an exciting end of the week right here. Well, at least with a lot of volatility. Again, for me, you might feel some FOMO right here. Some fear of missing out right there. As in, oh, there the move happens. Or for example, oh, on NASDAQ, there the move happens right there. It's important to understand you want a repeatable process. So not a one-time thing process. So for example, a good thing, or well, how do I say this properly? When people try to, for example, predict market crashes, oftentimes they're going to be very wrong. So they're going to be wrong again and again and again and again. The guy that predicted the 2008 crash, for example, he's been saying, well, the market will crash over and over and over again. And he's been right, very right one time as well. But for example, if you try to trade these moves after the fact right there, and you see, oh, that's where I should have gotten involved. It's quite difficult to make that happen. It's easier to, for example, consistently see these moves happen right there because those moves just happen a little bit more often, if that makes sense. So for me, these moves right there, I'm not too concerned about that. It's just interesting because then we have more price action to work with throughout next week. But one of the biggest mistakes you can arguably make is if it's not in your trading plan, now try to take a look at shorts right here to continue lower, etc. Try to trade these bearish value gaps. That's not that interesting, in my opinion. Let's see. I wait for expansion candles. That's my entry confirmation. So for example, if we take a look at NASDAQ right here, and we need to overtake this value gap, we start running the rejection high right there. Okay, we go down in time frame. And for example, this right here is an expansion candle. So that, for example, would be my entry. Expansion candle is the second candle of a fair value gap. Right there. So this is going to create a future fair value gap, if that makes sense. To be more specific, an expansion candle is when we close with a body above the first candle high or first candle low right here, for example here. It's also an expansion candle, a bearish one right there, if that makes sense. Lost on gold, didn't follow my trading plan, down on my profit account. 10K by 1.7%. 1.7% is very doable drawdown. So I wouldn't worry too much about that. What I would worry about is why didn't you follow your trading plan? That's important. So see the steps before that. What led you to eventually trade? Was it, for example, you got too excited? For example, what tends to happen a lot is here on NASDAQ, people start seeing this drop off and they just throw everything they know out of the window and they think, I need to execute right now. This is the moment right here. This is the moment I've been waiting for my whole life. And they throw everything they know out of the window and they just start executing these shorts that don't follow the trading plan, etc., etc. And again, I need you to understand, of course, if you zoom in right here on the 5 minutes, this 5 minutes value gap holds beautifully. That's beautiful right there. But is it repeatable? That's important. So yes, you can have a one-time winner right here that plays out very nicely. But the next time you're going to execute on these trades right there, is there a repeatable process? That's very important to understand. Because if there isn't a repeatable process, then there's no profitability, if that makes sense. So that's very important. I don't care about the past, Steph. What about your area of opportunity concept on gold? Is very low probability this period, don't you think? No idea. It's that's a bit silly in my opinion. It's like saying, well, Ariel, in 1948, actually, it was quite low probability. So you don't think this is a good thing to do? I care about the now. I care about now. What is happening now? Is it now high probability? Is it working, etc.? And then you evolve with the market, what the market is doing. So if you constantly look back, etc., and you try to see, okay, this, for example, why I actually despise backtesting, for example. Because if you now go into 2023 right there, and you have a whole trading plan made for 2023, 2020, it's completely different. Now, I'm certain if we actually take a look, a proper look right here at this time, you can probably make area of opportunity work right there, because area of opportunity is a universal truth. Because you're still, within this period, you're still trading in between PDWs consistently. So for example, you still disrespect this low to then target that low right there. But again, the point I'm trying to make right there is it's about now. It's about now. You want to look what is now happening. It's not relevant to take a look back at what is happening right here, what has happened right there. Does the trading plan work for you now? Can you evolve it so it works still in 2026, etc., etc.? That's important. Let's see. Let's dive into, let's see if we have some questions right here as well. Okay. Let's see. Okay. Okay. How can we trade a very large area of opportunity? Let me see if my oh, not that one. There it is. Okay. How can we trade very large areas of opportunity? Because I always get stopped out. Should we go down time frames to find a little or smaller area of opportunity? No, not necessarily. I quite like areas of opportunities, but again, it depends what time frames then you're going to be using. So if you have a very large area of opportunity, for example, right here on gold, very large area of opportunity, you might just want to stay on the same time frame right here or one time frame below right there. If you deal with very small areas of opportunities right there, you want to go down time frames quite a lot, if that makes sense. So that's important to understand. That's what, for me, that's just staying on the same time frame, understanding what the same time frame is doing. Because oftentimes, if you have a very large area of opportunity, and you, for example, have, let's say you go into the lower time frame, let's say this becomes a trade, or even let's say the 5 minutes, just for example's sake, and you cover this order flow lag right there. Okay, it's not a bad trade ID, but I would prefer to actually see, okay, the 1 hour can still create a 1 hour fair value right there. This could still be a fair value area. So if we enter, for example, right here, we could still retrace realistically back right there to then potentially continue higher, if that makes sense. So that's the way I would like to approach it, if that makes sense. Let me see. Will you place our stop loss below the recent order flow lag? Hello. What is your routine before you open the chart the first time? And what is your routine when you open the chart? How do you proceed and how long does it take? It's a good question. What is your routine before you open the chart the first time? I don't really have a routine, in all honesty. It's just, what do you want to do? But for example, when I think of routine, I always think of those videos of I'm taking an ice bath. I do 10 hours of journaling before I actually start diving into the chart or anything like that. There's no need for that. Usually my routine is I get out of bed, I brush my teeth, take a shower, and then I sit behind my chart, if that makes sense. That's usually what I tend to do. It's quite simple, quite straightforward. Then my routine when I open the charts is, well, my routine is quite interesting in my opinion when I open the chart. Because for example, on Sunday, what we do is we do a forecast, right? So we already have somewhat of an understanding of hey, what is happening, which instruments, etc., are interesting, etc., etc. So that's always what I keep in mind. So for example, what I'll use a lot as well is the list right here. So for example, in ES right there, if I think that it's interesting for longs right there, perfect. I'm going to put it on a long list right there, mark it with the green ribbon right there. And then what I'm looking at is, okay, what have I determined the previous day? So my routine oftentimes starts the previous day, because the previous day I do a forecast. I see, okay, this is what I want to see happen, etc., for me to get involved. So when I open the chart for the first time, I sit there and I think, okay, is it meeting my conditions, my criteria at that moment in time? Is that a yes? Is that a no, etc., etc.? And then if it's a yes, I just try to act on it. So I see if opportunity is there, if that makes sense. If we're in my area of opportunity. If it's a no, I wait. And if I need to wait, I might move my area of opportunity a bit more. So for example, a lot during the live sessions of the past week, we had scenarios like this, for example, right here, where we had large rejections. Now for my trading plan, I want to look at buys right there. I don't want to look at shorts. So, okay, I want to see us overtake this bearish fair value gap right there to then continue higher again. So for example, if I determine that on, let's say, a Monday night or Tuesday night, and I wake up that Wednesday right there, and I see that that criteria is met, okay, that's exactly where I now want to look to get involved, if that makes sense. I hope that makes sense. Let me know. Let's see. I've not entered a trade on gold. At least not today. No. I've not taken a trade today. Let me see. Okay. Yeah, that's okay. So I see a question right here in the chat as well. Yeah, my Forex funds is back. It's they're actually back or what happened? Well, to be honest, my Forex funds, the spreads were always really good, but other than that, the slippage was always very, very crazy. Yeah, I see a good question right here. So, okay, if we don't do backtesting to gather data, how do we go about it? Okay, let me actually show this right here as well. If you don't do backtesting, how do you gather data? I need you to understand something. I don't like that backtesting. I hate backtesting. Let me just say it like that. I hate backtesting. And the reason why backtesting doesn't work is because backtesting, if you backtest, for example, in 2020 and you have all this fancy data, it's not going to reflect the real life conditions that you are going to trade in. So backtesting is you can do hindsight backtesting, in my opinion. So for example, going over this past week, seeing what has happened, not using the replay right there. That's my main enemy right there, replay backtesting, because replay backtesting is not going to help you anything. So, and a couple of reasons why, because it doesn't reflect live trading, it doesn't reflect real trading. So example, if I want to swim, if I want to start swimming and I start doing like this here, I start doing things like this. Okay, I'm preparing to swim right here, just in the open air. I'm preparing to swim, preparing my mind to swim. And I jump in the water and I still drown. It's like because you're not, it doesn't reflect what real, you're not dealing with real water, you're not dealing with real emotions at that moment in time, etc., etc. So what is very important to understand is it doesn't resemble live trading at all. And the goal is eventually to somewhat live trade with something real on the line, right? So what should you do? Live trade. It's that simple. And if you live trade, you actually have relevant data right there for what your trading plan is right there. Relevant data. And again, when I say live trading at the start, I always mention, don't live trade with $1 million, for example. No. Just start small. Start with a 5K challenge. Start with the smallest amount that you can afford right there. And then from there, you can slowly build. But when there's something real on the line, you're going to learn a lot faster. You're actually going to take this serious as well. Again, that's very important to understand. So what tends to happen quite a lot as well is that people start backtesting, and the backtest, they go from live, and the live doesn't reflect the backtesting they did. Of course, it doesn't reflect it because it's completely different. And then what happens at the first loss or the first loss they take, they go back to backtesting. Okay, let me backtest some more. And they try to again, step into the water. Oh, it's a little bit cold. Okay, let me go back to backtesting. Go back to your comfort zone, if that makes sense. And that's consistently what tends to happen. So you're somewhat procrastinating. You're using backtesting to procrastinate the real process and the real progress. And that's very important to understand. So it's a valid question. But what if your trades only show up 2 or 3 months? Well, if that's the case, then you're likely going to be a position trader. If you're not a position trader and a swing trader or a day trader, there's something inherently wrong with the trading plan. Let me state that first of all as well. If you're a position trader, so that's only when you have, let me see, 2 to 3 trades a month. Okay. Well, it's not inherently bad. And you can probably up the frequency a little bit there as well. So that's not necessarily that bad, 2 to 3 trades a month. It takes a long time, don't you think? Yeah, but don't you think that anything successful takes a long time? Why do you need everything tomorrow? Don't you think my whole understanding took a long time? I don't understand that. So for some reason, and I get a little bit annoyed, you can probably see it, but I get a little bit annoyed because the whole trading industry is just so fucked up. It plainly said, it's just so messed up. Because you all see these Lamborghinis, these nice watches that oh yeah, if you want financial freedom, if you want to escape your 9 to 5, then go into trading. No, don't do that. It's not going to work like that. Anything good takes time. Anything good takes time. It's going to be hard, if that makes sense. So it's not going to be like you're going to have all this data and you're going to have a proven edge tomorrow when you get into trading yesterday, if that makes sense. And when I say yesterday and tomorrow, it might take you a couple of years. But again, then the question is, did you come into trading for trading or did you come into trading for the nice car, the nice watch? Because then you might as well do something else, if that makes sense. So that's my annoying thing, if that makes sense. Yeah, social media. Social media is completely messed with our mind, if that makes sense. And I get a little bit annoyed, and that's not at you, Steph. I get a little bit annoyed at the people that do promote it like that. You know, that's quite annoying because when you try to somewhat make trading a real profession, try to make it a little bit more serious, it's very annoying when someone else sits there and try to promote, for example, with, oh yeah, here, join my Signal group and you have a Lamborghini. You're just ruining it for the whole industry, if that makes sense. Because everyone knows trading as a certain stereotype. It's so silly, if that makes sense. If you have, but 2 to 3 trades a month, Steph, it's not necessarily bad. It's not necessarily that bad. And at the start, if you already have, for example, something that has proven itself, for example, right here, if I tell you to trade an all-time high protocol, you don't need to gather data on that all-time high protocol, with all due respect. I've already proven with the accounts, I've shown you here live on YouTube, etc., that it can work. So there's an edge there, if that makes sense. So if you start refining it over and over with actual live data, then 2 to 3 trades a month, it should be fine. It should be fine. If that makes sense, Steph. Let me know. Let me know. Keep me updated on that. Let me know. If making money from trading overnight was that easy, everyone scrolling Instagram would already be rich. The truth is trading rewards discipline, not speed. Yeah, it's a marathon. It's a marathon. So as fancy as it might be, etc. And again, you can make it work, yes, but it's a marathon. It will take long. It will take time. And for some people, it goes very fast like that. But for some people, it takes longer, etc. It's just a matter of, is this for you? Do you really find this interesting? That's important. I have no car. I can promise you one thing. I don't have a car. I've never had a car. I've never owned a car in my life. It's also not on someone else's name. I don't own a car. I don't have a car. I just don't have a car. You know, sometimes I think if again, but that's me. That's me. I would rather take that, let's say 250,000. And for some people, that's just their whole content marketing strategy, right? So for example, they invest 250,000 in a nice Lamborghini. And what they do is they just promote the living crap out of it. And then they get more signups for whatever they might be selling, if that makes sense. I just don't like that. I despise that. I would rather put that in stocks, for example. That's what I like. But yeah. Yeah. I've always, generally speaking, I've always used expansion candles to enter most of the time. So also when I trade Delirium, for example, I entered on the creation of fair value gaps, not in fair value gaps themselves, if that makes sense. If that makes sense. Let's see. Let me see. We were doing the questions. I got distracted. Okay, let me see. Can we trade? Can we trade an area of opportunity that's not in an order flow lag? I get stopped out almost all the time, especially if it's in the higher time frame. I'm not entirely sure what you mean by that. That's not an order flow lag. But we do always want to trade the most recent order flow lag, ideally, if that was your question, if that makes sense. No. If that makes sense. I'm not entirely sure what the exact question was. I'm sorry. How do you anticipate manipulation occurring before the news or when the price continues to decline without any manipulation? Okay, I like this question. It's a very nice question. Okay. Manipulation is purely going to be determined based on your bias. So what your bias actually is. So what I think is very important to understand is, for example, if I think ES is going to go higher, then all the fast manipulation that we have towards the downside right there, well, I already mentioned it, all the fast movements that we have towards the downside, to me, then that's going to be manipulation, if that makes sense. So for example, anytime we have this move right here, this to me is manipulation right there to continue higher again. And purely the reason why is because I have a bullish bias at that moment in time. So for example, ES right here, this to me at this moment in time could very well be manipulation to continue higher again afterwards. The reason why I think that might be is because I have a bullish bias, if that makes sense. So then it becomes easier to potentially spot manipulation as well. If we don't have manipulation before it, I don't really mind overall. But that's essentially what it comes down to. So for example, when we had these long, aggressive candles right here to continue lower, it was during a FOMC statement, I believe, right there. That to me was manipulation. And purely the reason why it was manipulation right there is because I had a bullish bias. Now, I need you to understand something. This is important. Because manipulation, of course, is only manipulation after the fact. Because I can sit here and I can have the suspicion that this is manipulation. But as a trader, you deal with facts. You don't act on suspicion. You don't act on rumors or what might happen, etc., etc. You act on the facts that you have. So the fact is that we're moving lower aggressively right there, right? So in order for this to properly be manipulation, we would, for example, need to overtake fair value gaps right there to then continue higher again right there. That's important to understand. So that's the way I see it, if that makes sense. If that makes sense. I don't use OTE recognition. I don't use that. Yeah, and honestly, I also don't really need a car. Otherwise, I get around with Uber most of the time, which eventually ends up being cheaper as well than buying a car. That makes sense. What do you do to keep busy when you don't see your setup? Usually I focus, for example, either on the MMT. I write down my thoughts. I do a study if I have a study to do. For example, in the past week, what I've been doing a lot is studying stocks a lot more as well. So then I go ahead and do that, if that makes sense. And I just set my alerts and walk away. And walk away. What do you think about TTFM? I have no idea what that is, my friend. I don't know what that is. Yeah, all good, Steph. All good, Steph. It was also not necessarily to you. It was more so me being frustrated with the industry as a whole than it was against you. I understand, Steph. All good. All good. All good. Let me know though if it makes sense. And keep me updated, please. That's important. Keep me updated how it goes for you. How's it go? Laziness. It's a good question. So I think there's a couple of things that come to laziness. For example, if I say at the end of the day, I'm going to do a study, and I don't do the study, then I've broken that trust with myself, for example. So if you make small promises to yourself, I think it's very important to keep that promise to yourself and actually do it. And that can be the smallest thing, right? For example, I need to clean my room here. I don't want to do it, but I need to clean my room. And if I then do it, so doing the things that I don't want to do, that eventually will help you a lot. Now, what I think will also help you a lot is your dopamine levels, which I think is quite important to understand. So, for example, for me, doing this, etc., working, etc., it's quite nice. It's quite exciting actually for me. But for example, if you are constantly gaming besides trading or doing studies, etc., and of course, the gaming is going to be a lot more exciting than doing this, for example, for most of people. So then your dopamine is a little bit messed up as well, which makes it very hard to actually take action, if that makes sense. So that's also something to take into account. With your screen time on phone, I think on average, it's about an hour. It's about an hour. But that's mostly as well from WhatsApp, or for example, I spend quite a lot of time on interactive brokers on my phone, etc., studying things. So yeah. Let's see. Hello, Jerome. By midweek, I was up 5 RR, and at the end of the week now, I'm a break even. What would you recommend for me to do with incorporation of limitation in trading? Okay, well, 5R shows to me that you have the potential to make good profits. So, but what we want to do is we want to make the equity curve less volatile. That's very important. So, for example, this is a good example. A lot of people can make 5RR, but the same, you can also lose at 5RR very fast. So it's not necessarily about making a whole lot of profit. It's about making steady profit, if that makes sense. So for example, one trade a day, but also by midweek, if you're up 5RR, then the goal is not necessarily to make more profit. It's just to protect the profit that you already have, if that makes sense. That's very important to understand. So number one rule of trading is arguably risk management, yes, but it's also to protect what you already have. And then everything that you gain on top of it is a nice bonus. That's the way I see it, if that makes sense. So for example, when you trade for investors, usually the pitch you're going to do is, okay, the main pitch is going to be about, I'm not going to lose your money. I'm going to make sure that I don't lose your money. And everything I make on top of it is a nice bonus. You're probably beating inflation, etc., etc. Okay, well, that's interesting. So for example, when you make a profit and by midweek you're up 5RR, then you really want to be very conservative with what you're doing, potentially decreasing the risk, etc., or only taking one good high probability trade for the remainder of the week, etc., etc. So that's important. It becomes more of a risk management thing, if that makes sense. If that makes sense. So 5 hours on phone, yeah, that is. If you do everything on your phone, that's quite understandable. But in general, that's quite a lot. 5 hours, yeah. When you think about that, because sometimes you see people, for example, they post on Instagram their screen time, etc., and so they have people with like 6 to 8 hours. It's quite a lot when you think about it. Well, you don't even need to think about that very deeply. That's just quite a lot. I mean, there's not a whole lot of hours in a day. You're sleeping maybe, say, 8 hours. Then you have 16 hours. If you spend half of that on your phone, not doing anything productive, that's a lot. It's a lot. Let's see, gold. There it is, the retracement. Yeah. Yeah, for me, again, I'll mention my thought process. For me, gold right here, not necessarily that interesting. The reason why it's not necessarily that interesting, of course, yeah, the area of opportunity is there, right? This is an area of opportunity right there to continue higher overall, potentially target all-time highs. It's late during a Friday. It's late during a Friday. It's late during the week. Then, to me, that's not necessarily that interesting. That's usually signs that we might create consolidations, etc., etc. I don't like that. I don't like that price action. This is very similar to what we saw last week, for example. Last week, we also did the live stream right there. We also had an area of opportunity right there. Also didn't take it. Late during the day, late during Friday, late during the week. I don't like that. I don't like that. I would prefer to wait. Let's see. Yeah. And I can understand that, Jerome, because when you have a good week, of course, you do somewhat want to push it as much as possible because it is a good week. You want to take advantage of it. But at the same time, you need to somewhat find a balance there where we still want to push it, yes, but we do want to take it easy. That makes sense. If that makes sense. But how can we develop a profitable strategy without backtesting? It's a good question. So you do it live, mostly. It's of course quite a simple answer, but what my thought process is behind that is, again, when you are, for example, if you are going to make everything 100% objective, I can see how, let's say, backtesting might be very useful to you because you make everything 100% objective. So there's no room for interpretations, there's no room for experience or anything like that. Everything is just completely objective. Now, what I think, when you make everything objective, you're competing not necessarily against retail traders anymore, because you're more so competing against, let's say hedge funds, etc., institutions, because those are also the type that, for example, might be more close to having everything close to 100% objective to have an edge right there. That algorithms can just execute, if that makes sense. Now, I think amongst retail traders, that's not necessarily going to be your edge. I think amongst retail traders, it's more so going to be your edge when it comes to psychology, when it comes to experience, for example. And when I think that, then backtesting does not really align with that idea, if that makes sense. So the way I see it is, okay, the way you can then create a profitable trading strategy, a lot of the profitable trading strategy is, the way I see it, a trading plan is going to be made amongst us retail traders, 80% objective, so you have guidelines to follow, 20% is mostly subjective, experience, etc., etc. Now, the 80% is just going to be there so you don't mess up. So you don't do anything silly. You're not going to take, for example, silly trades that you would normally never take. That's going to ruin your profitability, etc., etc. So what is important right there is that, okay, the 20% is going to be the real potential. It's going to have the potential to increase your win rate a lot more, to also increase your RR, etc., etc. So what is very important to understand right there is that comes a lot from experience, from doing studies as well, etc., etc. So if we backtest, we don't gather that experience. You don't really gain that experience of live trading because it's so different as well. So then the real edge, the real strategy, etc., gets developed in live. So seeing what live is relevant, can we evolve, can we adjust a few things, etc., to make it work right there. That's where we really start to work with, if that makes sense. And that takes time. So for example, if you have a preset trading plan, let's say you have the Ultimate High Protocol, let's say with Delirium, you already get somewhat of a preset trading plan. Then once you understand that preset trading plan, okay, if you take the smallest amount, and again, be willing to lose that, right? Let's say 5K challenge, just to get some experience right there. And you start trading that, you'll notice, hey, I can potentially adjust a little bit here, I can adjust a little bit there. And then over time, you might blow that account, and then the next challenge becomes a lot easier, if that makes sense. That's how you can scale. That's the way I see it. It's incredible how many times I get the question, please make a video on X concept, please make a playlist on X concept. I don't know what that is, my friend. I've never talked about that. I don't use that in my trading. Don't ask me, with all due respect. It's like asking Messi, can you make a video about basketball? Not implying that I'm Messi, with all due respect. A lot lower than that, but I hope you get the point. It's like asking someone in their expertise to talk about something else. It doesn't make any sense. Chinese, yeah. That is true. Let's see. You mentioned there were some interesting questions on Slido. Let's see. Okay. Sometimes price reaches a PD array, consolidates, and then wicks it again, expanding in the intended direction. There's an ST, but it fails. Okay. So what is important to understand right here is when we reach a PD rate right there, it consolidates and then wicks it again, expanding in the intended direction. There's an ST, but it fills. It tends to be the confirmation that we overall get. So for example, a lot of times when we retrace back into PD rate, it's actually not ideal, right? So for example, right here, if we have this daily fair value gap right there, and that daily fair value gap right there, we get a retracement back into that. But a retracement, the way I need you to see that, retracements don't just happen like this, right? They don't just happen up, down, like that. That's not how the market moves in general. So what tends to happen is when we have a lot of momentum, bearish momentum right there first, then we have an area where we can potentially expect bullish momentum again. And what tends to happen is we get a consolidation. Why? Because that's where price for a brief moment is actually stuck. So for example, can you also start seeing why a lot of times I use the thing that is preventing us from continuing higher, not the thing that we can push higher from. I've mentioned this again in a lot of different examples. If we get a retracement right there and we continue higher like this, if we get a retracement and we consolidate and then we continue higher like this, if we get a retracement and we just don't continue higher at all, in all these scenarios, there's one thing in common. And that is that the thing that is preventing us from continuing higher gets overtaken. So that is the thing that will lead you to missed loss right there. So you prevent the losses and you only catch the winners, essentially. So right here, for example, here you can also catch an ST right there on the lower time frame, try to trade it to then continue higher. But as long as we have this thing that's preventing us from continuing higher, this is more likely that we will consolidate, even though this fair value gap is stronger. But just because it's stronger does not necessarily mean that we won't consolidate, if that makes sense. So oftentimes, it comes down to waiting until we overtake the resistance right there. Not necessarily about the ST itself, if that makes sense. And if we're talking about sharp turns, I like sharp turns, right? Sharp turns, it's perfectly fine. Sharp turns as an entry confirmation, oftentimes at the start, is not going to be ideal. An ST plus RE, for example, is better when you have a little bit more confirmation, etc. Because at the start, you're not going to recognize when a fair value gap or anything or context area is very high probability. So if you can recognize that immediately and you recognize it's super high probability, then taking ST, for example, is a lot easier. But if you don't recognize that, then it's very difficult. It's very difficult. So then you're just going to take loss after loss after loss, if that makes sense, with an ST. If that makes sense. What is the correlating pair for silver? Most times gold. Gold and silver, right there. There's some differences between them, but most of the time that's it. Yeah. The roller coaster movements on gold. What do you mean with that? What do you mean? Thank you, Paul. Thank you. Let me see. How do you expect volatility using news like the one you mentioned, JPY crisis? When and how do you expect reduction or increase in volatility for pairs? Okay, so at this moment in time, it's very, very random, arguably. But for example, for JPY right here, on a lot of these JPY pairs, what we saw is a large gap right here. Okay, the large gap was because of the prime minister, etc., the new prime minister. And what we see then is, okay, we can assume we have a lot of volatility at that moment in time in the market as well. So that volatility will slowly start to die down again the more targets we reach. So if we start to reach majority of these targets, for example, fair value gaps right there towards the left, that's when we'll slowly start to die down again, if that makes sense. But for example, if we take a look at ES and NASDAQ right here, we see, okay, Trump said something about tariffs again. We have a large volatility towards the downside at this moment in time. Now, once we start reaching these targets right here, we'll slowly start to die down again and again. Now, oftentimes, you're not going to predict the volatility before it happens, if that makes sense, unless we're talking about big news events. So what is important to understand is just follow your trading plan. And if your trading plan afterwards, you get a lot of volatility, perfectly fine, if that makes sense. But trying to predict it before it happens, it's not ideal. It's not ideal because then you're, it's very difficult to actually start taking a trade, etc., if that makes sense. All right, team. All right. I'm slowly going to end it here. Ugh. My brain is fried for today. Thank you, everyone, for being here. On Sunday, it's we are live at 9 a.m. 9 a.m. New York local time. 9 a.m. I personally didn't trade any majors, but in general, I haven't really been trading any majors. If that makes sense. Indices, gold, yes, but the majors right there, not really. But if you start trading in between PDAs, etc., you should be fine. You should be fine. You should be fine. All right. Thank you, everyone. Likewise. Take care. Yeah, this time was 11 a.m. Next time, 9 a.m. New York local time. Thank you, everyone. Take care. Also do your own recap, I would argue, quite important. And then we'll see each other during the forecast on Sunday. Perfect. Thank you. Take care.